Hey there traders, this is Steve Miley, the market chartist for FX Explained and our regular weekly macro watch update for the week commencing the 18th of July 2022. Stocks rebound despite hot US CPI. Let's kick off with those macroeconomic and geopolitical developments from the past week. Well, the big data print came from the US CPI on Wednesday with the headline number moving to 9.1% year on year, up from 8.6% in May and higher than consensus estimates. There's now a growing anticipation from short-term interest rate markets that the Fed could raise by 1.00% at their meeting on the 27th of July now. The US 2 to 10-year yield curve continues to further invert a recession signal and last week moved to its most inverted since 2000. The Bank of Canada delivered a larger than expected 100 basis point rate hike. Consensus was for 75 basis points. And US earnings season kicked off with the financial sector with JP Morgan and Morgan Stanley both disappointing, though Citigroup was a positive. Now let's take a look at the global financial market developments last week ending the 15th of July. Well, despite a lot of negatives there in the market did dip lower, the stock indices, and here we see the Nasdaq dipping lower but rebounding, still forming this base. The market forming a base in here over the last 3 to 4 weeks. And similar in Europe in here, although going lower at the end of June, and the last 2 weeks have seen European stock indices here highlighted by the DAX trying to put in a basing formation. US 10-year yield moved back lower, back below 3% last week, and continues lower yield forces that have been seen since the last FOMC meeting. But the US dollar continues to surge despite lower yield pressures. The dollar seen as a safe haven and remains king, hitting new multi-decade highs across the FX board. And in particular, the euro versus the dollar went down and broke down through parity, a psychological level in here, and despite a slight rebound back above parity into the end of the week, stays vulnerable. Gold continues to push lower with the US dollar strength and remains vulnerable to downside pressures, aiming now at 2021 lows. And oil pushed lower but did get a rebound, but nevertheless has reinforced a bigger topping pattern. And copper continues its slide lower in here as we remain in a risk-off scenario with global commodity prices pushing lower, not being helped by the strength in the dollar. Now let's take a look at the week ahead commencing the 18th of July 2022. Well, we're still going to closely monitor the war in Ukraine, but having less of an impact at the moment. On the central bank side, we get the RBA meeting minutes released Tuesday. The PBOC, the People's Bank of China interest rate decision is on Wednesday. And then Thursday we get the Bank of Japan interest rate decision press conference and statement. And the same day we get the ECB, the much awaited ECB statement and press conference and interest rate decision, both coming on Thursday with the likelihood of the ECB putting in their first rate hike. On the earnings side, the US earnings season continues with the financial sector with Bank of America, but we also next week get IBM, Goldman Sachs, Johnson & Johnson, Netflix, Tesla and Twitter. So let's take a look at the calendar. Nothing really of note on Monday. Tuesday brings those RBA meeting minutes, the UK employment report and also an EU inflation report. Wednesday we get the People's Bank of China interest rate decision, a UK inflation report and also the same from Canada. Thursday brings those Bank of Japan and ECB interest rate decision statements and press conferences. And Friday brings probably the most important data of the week, the global flash PMI data from S&P Global. We also get UK retail sales and Canadian retail sales. I'm going to wish you all a great trading week. Stay safe out there and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.